We have just had some economic data come out of the US that I think is a total ball game changer. So in this episode, I want to break down exactly what that data is and what it means for you, for the Australian economy, and for Australian property prices going forwards. Hi, my name's Nero from Investment Rise, and let's begin by having a look at this article. Dow pops 1,200 points. S&P 500 jumps 5% in biggest rally in 2 years after light inflation report. Now, this is all about what's happening to inflation in the US, okay? And the key paragraph for us is this one, which says, October's consumer price index rose just 0.4% for the month and 7.7% from a year ago, its lowest annual increase since January, and a slowdown from the 8.2% annual pace in the prior month. Now, 7.7% growth is still high, right? It means that inflation is still very high in the US. And if you just took that figure alone, you'd be quite concerned. But I'm more interested in what I call leading indicators. In other words, indicators that show me what's going to happen in the future. And so that's why I think this October Consumer Price Index, which is a measure of inflation, rising just 0.4% is very important. But now let's go and have a look at some more data which shows exactly how much inflation is actually slowing. So this is from the US Bureau of Labor Statistics. And if we come down and look at Table A, percent changes in CPI for all urban consumers. So this is the US city average, okay? Here's what we want to look at. If we come back and look at October, 0.4%, as we said. But September was also 0.4%, and August was 0.1%, and July was 0%. So if I just add this up, 0 plus 0.1 plus 0.4 plus 0.4, that gives me 0.9% inflation growth in the last 4 months. Now, if we just annualize that, 0.9% over 4 months, over a year, makes it 2.7%. So that means the change in inflation is currently on track to be 2.7%, okay? That is very, very manageable, all right? And sure, though, inflation is still at 7.7%. That's because there are some factors that happened earlier on. We've got to wait for that to wash through. But what it shows is that inflation is actually coming down, and all the interest rate hikes that not just the RBA, but especially that they've had in America is starting to really put downward pressure on inflation. It's starting to slow the rate of inflation growth. And mind you, we haven't seen the full impact of interest rate rises yet, okay? That's still to come. Now, when we look at inflation though, is that all there is to it? What else is there that can support the fact that inflation is slowing down? Fair question. Let's have a look at this. This is the freight index data, weekly prices, okay? And what we can see here is as we go back to September of last year, so about 14 months ago, it was nearly $11,000. Today, here we are all the way down to just over $3,000, okay? So nearly a quarter of what they are. So shipping freight data is very important here because it's been a big factor adding to inflation, because if it costs more for companies to ship their stuff into Australia, they've got to add that onto the price, which makes things more expensive, which adds to inflation, okay? So this has been a key contributor to inflation growth, and as we can see, prices are right down compared to where they were and heading downwards. What about global supply chain pressures? Right now, we know, for example, if you're trying to buy a new car, the waiting time is hideous depending on which regular brand you might be going for. Some people waiting 12 months, even 2 years to get that car, okay? It's because of just what's happening in the whole supply chain, okay? And this is another reason why many builders have really struggled, because their supply chain pressures, in other words, trying to get the supplies they need, is just costing them so much and taking so long. But let's have a look at the Global Supply Chain Pressure Index, the GSCPI. And here we go again. This is at the end of October. We're down to about 1 compared to, and never about what is the figure. It's about what is it relative to what it used to be. Okay, it's what are you comparing it to? That's the key thing. And here we are, we're looking at a figure of 1 when, if we go back to November of last year, so 12 months ago from when I'm recording this, it was at 4.30. Okay, so it's come down by about 75%. So again, when you've got global supply chain pressures reducing, you've got freight charges reducing, okay? These are all contributors to inflation and contributors to reserve banks and central banks making their interest rate decisions. What about then commodity prices? Well, here's a chart from the Reserve Bank of Australia, and what we can see here is that as of 2022, towards the end of 2022, we are coming down, okay? Yes, commodity prices are still high looking at this chart compared to almost any other time except for 12 months ago or so, okay? So again, commodity prices are coming down. So we can just see lots of factors are coming down. This is why inflation growth is lowering as well, okay? And that's why, as I've said in the past, I think the Reserve Bank of Australia is getting close to their peak in terms of interest rates. But most people don't look at data this way, all right? And that's very clear because when we look at the Australian Consumer Sentiment Index, okay? This is again a chart from the Reserve Bank of Australia. What you can see is this blue line here is pretty much at the lowest it has been. But there are a couple of things to consider. When we look at how low consumer sentiment is, and we try and find previous times when consumer sentiment was this low, last time it was roughly this low, didn't get quite this low, mind you, was in 2020. And what happened to property prices shortly afterwards? Okay, all right, maybe that was an aberration. Well, let's go back then and look at when it was last this low, was sort of 2008. And what happened to property prices shortly after that, okay, especially in Sydney and Melbourne, we know that they took off. Now, you just can't say, okay, based on this chart and what's happened before, property prices are going to rise, okay? But it does show one thing, that consumer sentiment being so low, it's actually a scary place because so many of us make decisions based on what people we know think, okay? There was in fact a great study done about 50 years ago, and it was based on essentially how do we as people make decisions, okay? And what came out of that was the fact that most people do not make their decisions based on data. They make their decisions based on what other people think. And the more people who they know who think a certain way, that's what then people believe is the right answer, even if it's dead wrong. And so the problem with consumer sentiment being this low is that I can almost bet you're going to know lots and lots of people who are going to tell you the end is near, the economy is dead, property prices are going to crash, all of that negative news, and it's going to create doubt and it's going to impact on your property investing and financial decisions, okay? That's a big part of why I'm such a big believer in data and why I share so much data with you, and you'll know this if you've been a long-time follower of mine, is because I understand that how we as human beings make decisions, okay? Now, as I said, you can't just say, oh, because consumer sentiment was low a couple of times before and property prices rose straight afterwards, now is a great time to buy and I can go and buy anywhere. No, not necessarily, but there are some key factors to have a look at. So these are the Sydney auction results for last weekend. And as you can see, it's sitting at 60%, okay? Which is very low compared to this time last year, which was 75%, okay? So many people think, oh, that's bad. But what we need to understand is that when you have auction clearance rates at 60% or above, that's indicative of a fairly balanced market, okay? So this is not doom and gloom by any stretch of the imagination. I'm looking at Sydney here, which has had the biggest price falls nationally, okay? Let's have a look at Melbourne. And again, with Melbourne, you'll see that auction clearance rate is 60%. So yes, lower than this time last year, which was at 73%, but still very solid. So what's driving this stronger than expected auction clearance performance? Well, first of all, property prices are about 10% or so lower than they were at the peak in many areas, especially in Sydney and Melbourne, okay? So buyers are now happy to go in because they know they can get a good price. Sellers have also adjusted their expectations accordingly. Rental inflation, rental growth is really strong at 10% plus in many areas, which is very attractive for investors who want to get that stronger cash flow. Migration is really, really strong, which is increasing demand on property, but supply is not keeping up, especially with construction costs still being quite high. And finally, I do believe that many Australians are starting to see that the Reserve Bank is getting to the peak of its interest rate hiking cycle, and they can see that now is the time to buy. So it's very interesting that auction clearance rates, which are a key indicator of property price performance in Sydney and Melbourne, and that these auction clearance rates are holding strong when consumer sentiment is so low. But on the other side of the fence, you just can't say, oh, look at this data, it's good, and you can go buy anywhere. No, you can't. You need to do your due diligence. You need to look at different suburbs, because I'm giving you citywide data, okay? But then if you look at the other side of the fence, okay, what's happening in Sydney and Melbourne, are two bigger markets, we've got fewer auctions right now. More properties are selling by private treaty than they used to, all right, which might be indicative of the fact that the markets aren't as strong as perhaps what this auction clearance rate is suggesting. Borrowing capacities have fallen by double what property prices have, okay? And that's creating a lot of internal migration. All right. But the fact is, though, it's not all doom and gloom. And so this is where, if you as a property investor are thinking, I need to wait until everything is all good, it's all green lights, all the data shows that everywhere is a good place to invest. If that was to happen, and yes, it did happen at some point in 2021, okay, but that's very rare. It happens sort of once in 20 years, sometimes even once in 30 years. And so if you wait for everything to be all green light so you can then just blindly buy anything and hope to make money, the odds are you're going to miss out on some of the best opportunities that are out there. The fact is, it's not all doom and gloom. The data is clearly showing that inflation growth is starting to slow. I believe interest rate hikes are starting to come to an end, and different pockets around Australia are performing differently. And so as a property investor, due diligence is important, research is important, but do not be surprised if 6 months from now you're starting to read about areas that have grown significantly while others have not done so well. And the question is, what did you do? Did you sit on the sidelines and miss those opportunities? Or did you choose to jump in, do your due diligence, and take advantage? That is up to you. Hi, it's Nero here again, and thanks so much for watching. If you like what you saw and you're looking for a proven recipe, a blueprint on how to build a property portfolio that gives you passive income, then click the link below this video and get a copy of my book, Wake Up Wealthier, How to Build a Property Portfolio that pays you an income each and every month. Okay, when you click the link and you download your book, you can get both the digital version and the audio version in case you don't like reading. All right, so I used to sell this book for $49, but right now I'm making it totally free. Why? Because I want more people to get this information, and I know that a segment of you will then like what you see in the book and choose to reach out to find out more about our services. But even if you don't, if you're serious about building a property portfolio that pays your passive income, then you really want to get my book, Wake Up Wealthier. It contains the secrets that I have fine-tuned over the last 19 years. It's totally free for a limited time. Click the link below.